Ajay Bagga is ready. Let's connect with him and let's connect the dots here to understand what he makes of the current market setup. Last time it was a red tie, today it's a yellow tie. We want to see a green tie. Everybody wants to see a green tie today. Markets are down 1.5%, Ajay.
Yeah, this always works. It doesn't make for great TV. It jars on TV, but this color works overall. It can show your neutrality.
The TV tricks now, Ajay.
Sorry,
No, I'm saying
Nikunj?
you've learned the TV tricks now.
Yeah, yeah. One has grown up with you on the medium. I think I would have crossed about 8,000 shows overall. So learned a little bit. Not an expert like all of you.
8,000 shows, man. I don't know. I mean, are you trying to tell me I'm that old? Okay, we'll talk about our my whole friendship with Ajay perhaps some other time. But right now, let's talk about markets. And Ajay, what could influence the script of how markets would move now for next quarter or so? Will it be Fed? Will it be Donald Trump? Will it be earnings? Will it be budget?
Yep. If I could get an option from you, Nikunj, for old time's sake, to say all of the above. But I think the biggest factor globally will be the Trump presidency. Now, is a lot of it already baked in? That's the big question. Has the market priced in? Because Trump at the end is a pragmatist, he's an opportunist. It's not necessary that the stated policies will actually come through. Most of the statements are a negotiating gambit. So you throw down your cards and you wait for the opponent to show their cards, and then he makes a different play after that. So it's a wait and watch. Markets have priced in one level of Trump moves post Jan 20th. But let's see what actually comes. That could surprise. So that's one. As far as the Fed goes, Nikunj, rate cut tomorrow and then a pause probably. Trump wants a weaker dollar, but the markets might not deliver that to him given all the trends that are going into a dollar strength. In fact, we are looking at parity with the euro coming for the dollar within next year. It's already gone from 1.1 to 1.05, and you could probably see a 1:1. So a stronger dollar, which Trump won't like, but you're not getting a Plaza Accord, what Reagan was able to do, and which really brought down the Japanese economies. If you look at the Communist Party meetings in China, they keep saying that we are not the Japanese, we will not do a Plaza Accord, and they have been depreciating their currency. So second would be the Fed. Then coming to us domestically, it's going to be one more challenging earnings quarter, Nikunj. Both the GDP as well as the management guidances that are coming out not looking too good. So we are going to see underwhelming earnings once more for this quarter, which will start coming in by the second week. And fourth, then the budget. Budget becomes important because this has been an year which has, again, sorry to use the same word again, but underwhelming year economically because the counter-cyclical moves that were expected both on the fiscal and monetary side did not happen. RBI tried to defend the rupee using a $50 billion of FX reserves when all the other currencies were depreciating against the dollar much more strongly. And that has come through in the November merchandise trade gap of 37 billion. So that has been a difficult exercise by the RBI. Secondly, it took out liquidity from the money markets, which becomes a restrictive monetary policy then. And on top of that, you did not cut rates. So there was no counter-cyclical move on the monetary side. On the fiscal side, we did not spend. So 4 months gone in national elections, then a very big state like Maharashtra, a very prolonged election, which was postponed a lot. And, when 14, 15% of your GDP comes from one region and you're not spending, that has an impact. So we have had underspending by the government, which has caused all these second order effects of lower aggregate demand, lower consumption, and also infrastructure spend not keeping up. So now we'll be in a catch-up mode. These 3 months were expected to deliver something better. The second half was expected to be better. October did well, but November again did not perform that well. And let's see what the December numbers show. But the next 3 months will be critical for government expenditure to at least catch up near, and that 11 lakh crore infra spend will not happen. Now, like last year, 50,000 crores was left over. Let's see how much gets left over for this year. And that has an impact on the economic momentum. So I hope I answered all the questions, Nikunj.
Yes, perfectly fine. I just turn back to what is happening in the near term here. And in the near term today, I think there is a bit of a profit booking. Naresh, does that shake the bulls? Today's big sell-off, because what we saw last week was like a sharp recovery from the day's low on Friday, and then we've seen a sharp sell-off from the day's high. So it's a bit of a mirror image. Tuesday is a bit of a mirror image of what we saw, let's say, on Friday.
So what we've seen is the same thing we saw in the previous week. We saw a recovery on Thursday. Next 5 sessions, we stayed in that band. And we are replicating the same move. Friday, we saw a very solid recovery, 500, 600 points from the low. And now we are fading it off. So it's been a problem in terms of no follow-up price action on the buy side as well as on the sell side. So in this period, we are stuck. It's a chop market where you get stopped out much more often on both the sides. Till the time we don't get beyond 24,200, 300 and 24,800, 900, it's going to be a market where you trade on the lower size and wait it out.
That's a take coming in on some of these stocks. Just taking stock of some of the other buzzers. In the last few minutes, Mahanagar Gas has taken a bit of a beating, so watch out for that. HFCL is the other one, and IGL2 is actually under pressure. So some of these energy names are on the back foot. Of course, to begin with, Reliance, Power Grid, NTPC, they were down in any case. Now the gas companies are also giving company. Even Oil India is down. So clearly that as a pack is on the back foot, and so is the entire financials. So the Shrirams and SBFC of the world, the L&T Financial Holdings, even banks like Bandhan Bank, Bank of India, RBL, they're all down and out, a cut of anywhere between 3 to 5%. On the gaining side, however, Jyoti CNC is doing quite well, 11% higher. This morning, there was that initiation note coming in on Afcons as well. And to the point, Ajay, that you were making on, infrastructure and the capex spend, do you think if there is a pickup in the last quarter, some of these infrastructure companies might get to benefit as well?
Definitely. I think, out of the four pillars really drawing up the economy, the private consumption is not growing as fast as we would like to. Rural consumption is at about 5%, urban is at about 4.5% year on year. So not up to the mark. Your private capex is okay, but not that great again. Exports are not doing well, as yesterday's numbers on the November merchandise exports showed. Service exports are doing well, but merchandise exports are suffering. And that leaves the fourth pillar, the government capex. And high hopes from there, Nisha, that this will come through. And there will be, expenditure from the government, and at least some big projects being announced, be it in railways, be it in defense, be it on the infrastructure side, construction side. So that's one lever that's available for the government. Apart from giving some GST breather and trying to boost the consumption economy, or on Feb 1st, giving some tax rebates. This misnomer that a 15 lakh per annum person is rich in India, that sits at the heart of this consumption issue. Overall, there is a 70-80% huge segment which is very, mass as such. But you get slightly affluent. If you can put more money into those pockets, you get a kicker for the economy immediately. It's like the infra spend gets you a four or five times every rupee that you spend in infra gets you 4 or 5 times of rupees in the GDP in a growing economy like India. Same way on consumption, if you give the affluent class some more money in their pocket, you see that kicker. If you give it as a dole out, that gets saved, or that goes into paying off outstanding loan or something else. It does not come back immediately into the consumption. So I hope some smart moves are made in the budget and some tax relief is given. That is much needed to take the economy back into that 7.5–8% real growth trajectory. And along with that, of course, the infra. But I think at 11 lakh crores, we have reached our capacity to spend. I don't think in the present setup we can spend more than that. So probably we'll have to keep that same number, which could be a disappointment on 1st February.
Samir is ready, and Samir's got details on what SpiceJet is planning to do. Now, they've raised about 3,000 crores, and where are you joining from? This is a very interesting location in Delhi. Samir, where are you joining from?
So that's the BJP headquarters, and over here all the policymakers they come and then they decide that how they want to take it forward. Though it is a political party headquarters, but the cabinet ministers from the BJP, they come in and they discuss the roadmap for the party, for the government's performance as well. So that's a BJP headquarters.
Okay, SpiceJet. Samir, what do you have for our viewers? So SpiceJet has got cash on the balance sheet, 3,000 crore, which means the benefits of operating leverage and financial leverage should kick in now.
Definitely, sir. So now SpiceJet Airline is looking to revive its fortune after raising rupees 3,000 crore through QIP in the month of September. And they have formulated a three-way strategy. The first is to improve their financials, and they have set a target to become a cash flow positive company by March 2025. And in the same direction, they have cleared the statutory dues or the liabilities up to 70%, whether it be related to the employees' salary, the PF dues, the GST or the TDS. So largely they have cleared the liabilities. Still around 30% is left, and they are looking to clear it off by next year. The second is related to the fleet expansion. So SpiceJet Airline, once it was struggling to remain afloat, and then they were having just 21 aircraft, but now they are having 28 aircraft, and they are also having 25 grounded aircraft. So to revive the grounded aircraft, SpiceJet will be infusing rupees 800 crore, but they have set a target to get 35 aircraft by March 2025, and then the larger goal is to have 70 aircraft by FY 2026 and 100 aircraft fleet size by 2027. That's the larger goal that they have set in. In terms of fleet expansion, quite ambitious, but in addition to this, they are also looking to expand their footprints in flight frequency, not just at the domestic front, but also on the international sector. When it comes to the international part, so SpiceJet has got some exclusive right to the Middle Eastern destination. They ceased to operate because of the non-availability of aircraft, but now as the situation improves, they are looking to expand the flight frequency. Also, they are looking to increase the numbers, the flight numbers under Udan Yojana, the regional connectivity scheme. One more interesting move that we will see from SpiceJet in coming year 2025, that they will be starting seaplane operation. This will get a boost from the tourism sector as well. So seaplane operations on selective exclusive route, whether it be Shillong, Guwahati, Lakshadweep, or even in Gujarat. And for the same, they have also developed a venture with the seaplane operating company De Havilland. So that's the interesting move that we can see from SpiceJet. Overall, if you see, they are looking to improve financials. They are settling their dues with the aircraft lessors and vendors. For example, in the last 2 to 3 months, they have settled the dues with the aircraft lessors. That was earlier claim was made of around that was $260 million, and they have paid just around $52 million to settle the dues. So they are settling the dues. They are looking to improve the overall performance of the airline, and then they are hopeful that in coming years they will be able to have a significant chunk in the growth of India's aviation sector.
At tapping into the India's aviation sector yet again and on a plan to perhaps take off again. That's the view coming in on SpiceJet and what they have in store. In the meantime, five-star business is actually doing quite well. It's managed to perk up around 5%. Remember that entire MFI and the MSME lending space was going through its own trouble, but five-star has managed to see a bit of a bounce back. Kunal, anything on the charts that you would want to talk about, five-star business?
So don't track the stock of on a very closer basis, but I think looking at the charts for the last 2 days, it indicates that maybe I think we could be looking at a bounce back of sorts for the stock from a recent sell-off from 950, 930 levels towards a point when the stock had come down to 620. So almost like a 300-pointer correction for the stock in the last 1 month, and now we're seeing a 100-pointer bounce from those 620, 30 levels for 5-star. So we need to see whether this an initial price action move backed on the back of volumes. If that subsides, whether the stock corrects back again on the lower side or whether it just consolidates. And if that happens, if the consolidation happens, then that could be considered to be positive for 5-star. So maybe more of a wait and watch at current levels.
Okay, and any view, Naresh, that you have on L&T housing as well as PNB housing?
So both of these themes have gone sideways after the initial recovery. So would wait it out, say if we start sustaining, say PNB housing starts sustaining above the recent highs, which was closer to that 980 mark, then it becomes interesting. It's made a base around 850 to 3 bottoms around this area. So 980 crosses, we get positive. Same way L&T Finance, so that would be a number at 151, 152. Till that point of time, it looks like a base building formation on both these names.
Okay, that's the take coming in. We'll take the BTST trades as well from our technical experts. So Kunal, what's the BTST idea?
It's STBT from my side. So 2 sell calls. The first one is a sell on RBL Bank. That's a definite candidate for weakness because the stock is confirming a return or reversal back again from its 50-day moving average. So would suggest a target of 160 on the downside, stop loss at 172. And the second would be a sell on MGL. The stock had completed a gap or a positive downward gap for itself. Now it's coming back into a retracement mode on the downside. So we'll look out for targets in the range of 1220 and stop loss to be kept at 1264.
Okay, incidentally for RBL Bank, what also is weighing on the stock is the latest commentary coming in after the meeting with Citi analysts, because they're talking about a modest low double-digit growth versus 15% growth that they talked about earlier. So that guidance cut is also weighing heavy. But Naresh, what do you have for us, BTST or STBT?
So one BTST and one STBT, contrarian trades both. First is about Reliance Industries, hardly any bounce from the recent lows. I would expect it to hold the recent bottom. So a stop loss at 1230, target price of 1275. Second is a sell on Indian Hotels, which has continued one way overbought and seeing some bit of a pause today. Would be a stop loss at 885, target price of 860.
Point taken. Before I hand it over to Snehi, Mr. Bagga, last question from you as far as the real estate pack is concerned. There seems to be a bit of a dichotomy. If you ask people, they don't want to buy real estate and they say that the prices are not good enough to sell it. But if you're talking to a developer, they are very happy with the kind of sales they are witnessing. What's your take?
Yeah, what you see, especially on the premium segments, multiple hundreds of crores of sales happen on opening day. That, it takes a lot of work by the brokers in the background, and they collect, token checks, and then there's a big announcement made that the entire project got sold out. So it is a good amount of marketing happening. But on the ground, what we have seen, it's been a great year. Again, nearly 5.7 lakh crore houses getting registered this year. So real estate has had a great year. The sector has done very well. It's one of the top performing sectors for the year. As the rates come down next year, hopefully RBI starts a rate cutting cycle by February. The sector should benefit. Again, the clean out has happened in the sector. So from some 27,000 mom and pop developers all across the country, we are boiled down to a few hundred, and out of which we get a few which are listed, good clean balance sheets. These are the survivors who are really now picking off most of the juicy fruit. So it is a good sector to be in, and still at about year 3 of a 10-13 year cycle that you normally see in real estate. Valuations always remains an issue, but it is a game of being able to get those customers, and there, thanks to the housing finance companies, the availability of finance, it's become more of an EMI game, and affordability that way has.
Okay, Mr. Bagga, thanks so much for joining us. On that note, we'll let you and Naresh go. Naresh, thanks for joining us as well.
If you like this video, then like, share and subscribe to ET Now.